Ladies and gentlemen, good day and welcome to the Tube Investments Q4 FY25 earnings conference call hosted by IIFL Capital Services Limited. Please note all participants are currently in listen-only mode. There will be an opportunity to ask questions following the conclusion of the management's opening remarks. Please note this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Capital. Over to you, sir.
Yeah, thanks, Inba. And welcome everyone to the fourth quarter FY25 conference call for Tube Investments of India. From the management, we'll have Mr. Arunachalam, Executive Chairman for the company, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Mayappan, Chief Financial Officer for TI, Mr. Shivdeep Singh Jammu, Division Head for TPI, Mr. Shiv Kumar, Division Head for the Metal Form Products, Mr. U. Rajagopal, Division Head for the TI Cycles business, and Mr. Jalaj Gupta, CEO for TI Clean Mobility Private Limited. To start off with, I'll hand it over to Mr. Ahuja for the opening comments, and then we'll have the Q&A.
Thank you, Anupam, and good morning to all. From management side, just a commentary. The Board of Directors of Tube Investment of India Limited met and approved the financial results of quarter and year ended 31st March 2025. The board has declared an interim dividend of rupees 2 per share in February 25, and the same was paid to the shareholders in March 25. The board has now recommended a final dividend of rupees 1.5 per share for the financial year 24-25. Just a snapshot of standalone results for Q4 and the full year. Revenue for Q4 was 1,957 crore against 1,962 crores of the same quarter previous year. Revenue for the full year was 7,893 crores against 7,611 crore of the previous year. PBT before exceptional item for the quarter was 896 crore and the year was 1,544 crores. During the quarter, the company has recognized a fair value gain of rupees 569 crore in its P&L towards investment in CCPS of the TI Clean Mobility Private Limited. PBT before exceptional items and the CCPS fair value gain for the quarter was 327 crore against 318 crore for the same quarter previous year. PBT before exceptional items and CCPS fair value gain for the full year was 975 crore against 970 crore for the previous year. ROIC at 44% for the year ended 31st March 25 as against 54% in the previous year. Free cash flow for the quarter was 225 crore and the cumulative free cash flow for the year is 397 crore, which was a 55% of the PAT. This is excluding fair value gain. Coming to the respective businesses, engineering, the revenue for the quarter was 1,229 crore compared with 1,276 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 142 crore against 160 crore in the corresponding quarter of the previous year. The revenue for the full year was 5,029 crore compared with 4,921 crore in the previous year. Profit before interest and tax for the full year was 617 crore, which is same as the last year. Coming to metal form products, the revenue for the quarter was 403 crores compared with 386 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 39 crore as against 42 crore in the corresponding quarter of the previous year. Revenue for the full year was 1,565 crore compared with 1,519 crore in the previous year. Profit before interest and tax for the full year was 164 crore against 187 crore in the previous year. Coming to mobility, the revenue for the quarter was 181 crore compared with 150 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 4 crore against the loss of 9 crore in the corresponding quarter of the previous year. The revenue for the full year was 670 crore compared with the 664 crore in the previous year. Profit before interest and tax for the full year was 5 crore as against the loss of 18 crore in the previous year. The revenue for the quarter was 244 crore compared to 230 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 13 crore as against 17 crore in the corresponding quarter of the previous year. The revenue for the full year was 987 crore compared with 834 crore in the previous year. Profit before interest and tax for the full year was 48 crore against 65 crore in the previous year. And with this, this is standalone consolidated results. TI's consolidated revenue for the quarter was 5150 crore against 4490 crore in the corresponding quarter of the previous year. The profit before share of profit of associate joint ventures for the quarter was 342 crore against 405 crore in the corresponding quarter of the previous year. With this, maybe I hand over and back to you and happy to take any questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participant tab on your screen. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you wish to ask a question, you may click on the raise hand icon. We'll take our first question from Rishabh Shah from RBSA Investment Managers. Please go ahead. Mr. Shah, may we request you to unmute your microphone and you may ask a question.
Yeah, am I audible?
Yes, sir.
Okay, yeah, good morning. Firstly, we have been saying in earlier ConCalls that the TI has room for one more business division that could be incubated. So any thoughts, have you finalized anything? What can it be? And also lately the government has started new PLI for electronic components. Are we looking at this? Anything that could be done? That is my first question.
Yeah, Rishabh, thanks for the question. As of now, we are still studying for incubating another business line in the TI. And regarding your question to PLI, we have yet to take call. We are also studying that option, but yet to conclude on that.
Okay. And my second question is on medical devices. We were expecting certain certifications from the export market. So have we received it? What is the status? Because I believe, we are not growing as per the potential of the division so far.
So Rishabh, we agree with your remark on, we have already invested in CE certifications for the Europe, which was a work in progress. And there is a bit of delay in getting those certifications. And we are expecting to be over in next coming quarter, maybe which is current quarter. And after that, maybe the business will also start like fixed cost is already invested in, but revenue is to still kick on in a large way for the export market, which we are confident going forward will take place. But there is a bit of delay. We agree on that.
My third question is on the EV segment. Well, we have seen lately, there has been high competitive intensity, especially in the three-wheeler. And, so I just want to understand, what more are we doing to, improve the battery range, after sales and reduce cost, given the competitive intensity that has happened. And also one of the competitors is saying that they are already doing motor in-house and they're also getting eligible for the PLI thing, in this segment. So where are we on both of these?
Okay, so Rishabh, Jalaj Gupta here. I'll take this call. So you are absolutely right. The intensity of competition in the three-wheeler electric business is increasing. That's because we are seeing a very high degree of electric conversion of the ICE and other fuel vehicle into three-wheeler. As far as we are concerned, we have our product plans. In fact, as of today, we offer one of the highest range that's offered on any particular battery offered in three-wheeler. And we are working on introducing variants of offering other battery packs as well. That's one. Second part of your question was doing our in-house motor. There are various microcontrollers that go into electric vehicles, be it three-wheeler or other components. We are well on our way to indigenize majority of the microcontrollers within ourselves that is in the business, and we'll be among the very few ones in the country to have their own microcontrollers for the business itself.
Mr. Shah, may we request you to return to the queue, sir, as there are participants waiting for their turn. We'll take the next question from Vipul Kumar Shah of Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. Can you give the volume figures for all the three electric products? And what is the quarter to quarter change?
Okay, so I'll take this. Quarter four was perhaps our best ever quarter since the inception of TI Clean Mobility from the top line perspective. As far as the full year is concerned, the overall revenue grew by almost 160% over F24. As regards the specific volumes, the total volume for the year for the four businesses that we operate were 7,540 numbers. There are two, three more things I just wish to highlight over here. IPL Tech, which is the flagship business for the TI Clean Mobility, their quarter four again was the best quarter. We could deploy 65 trucks in the quarter four. And just to give you give everybody the perspective of what IPL Tech is doing in the entire last financial year, all over the country for heavy electric trucks, 206 trucks were deployed in the country, in the entire industry. Out of 206 trucks, 172 trucks were deployed by IPL Tech. So that's the kind of impact or that's the kind of lead that IPL Tech has taken in the heavy electric commercial vehicles. Now I'll talk about two businesses which saw them moving from project stage to the full-fledged business scale, which is our ESCV, Aviator brand, small commercial vehicle, and the electric tractor business. So quarter four saw both of the businesses seed volumes about 14 in one case and 17 in another case into the market for quarter four, which was the plan. So the plan was to ensure that in quarter four, all the four businesses are fully operational, which we have achieved. And now we have the entire full financial year where all the four business will be fully operational.
No, sir, can you give three-wheeler numbers also?
Three-wheeler numbers for the quarter were 1662 and for the year were 7324, 7324.
And what was the same figure for third quarter, sir?
Third quarter figure was, third quarter figure was 1800.
1800. So we have
But
degrown.
we maintained our for the full financial year, we maintained our market share. In fact, for the full financial year, if I may just tell you, the three-wheeler L5M category of business, this particular TIV, it grew by 91%. And just give me a minute. The TIV grew by 91% and we grew by 116%. The three-wheeler passenger business in which we operate for FY25 over FY24.
So on any of this truck or three-wheeler business, do we expect to break even at EBITDA level in near future, sir?
So the plan is that yes, the attempt is that for both these businesses, the attempt would be that at least for a quarter or maybe even more, the attempt would be within this financial year, which is the current financial year, to achieve a operational break even.
Okay, and sir, my last question relates to engineering division. So there it has stagnated. So are we losing any market share? Means can you comment qualitatively? Means tonnages are less, or how should we read it? Because that was our main growth engine in previous years.
So growth momentum and the share of business continues to be strong in the engineering division. We maybe, let's say, we have rather improved our market share in the domestic market. Coming to the margins, what you are able to see the stagnant level, that is because of a new facility in CRSS at Nasik has kicked off. And we are in the process of taking customer approvals, which is expected to be over in next 3 to 4 months' time. And then capacity utilization, which is just started now, is going to improve. And then we see the revenue growth as well as the margin improvement is going to happen in the future.
So should we expect better numbers in the second half of this year for engineering division, sir?
Yes.
Okay, sir. Thank you very much. I'll rejoin the queue.
Thank you. A reminder to our participants, if you wish to ask a question, you may click on the raise hand icon from the participant tab. We'll take the next question from Anupam Gupta of IIFL. Please go ahead.
Yeah, thanks for the opportunity. So, sir, basically coming back to the core business, which is engineering and metal form, can you please talk about the how did the exports fare in this quarter, and possibly break it up between the engineering division as well as for the industrial chains which we exports? And similarly, how was the performance for the large dia tubes for which the new capacity was under construction in the last year?
So, Anupam, morning, and thanks for the question. Maybe let's say to answer your question one by one, particularly to the exports business continue to be 15% of the TI sales on overall basis. And it is continued to be maybe let's say engineering division as well as IC. But however, maybe on account of little uncertainty, which all of us are aware of, customer relationship are in let's say in contact, and maybe let's say continue to have a great relationship with the customers. But there is a bit amount of uncertainty in the short run, which maybe in our view it's a just a temporary period, and after that will be back. Coming to large diameter plant, yes, you're right. For extended range, the plant is operational now, and we are in the process of getting the customer approvals for which maybe all are the existing customers only. There are hardly new customers, and we have to go through the cycle of getting product approved, which we are hoping in next 1 or 2 months will get approved, and then we see that extended range in the large diameter also will start kicking in for the engineering business.
Okay, okay, understand. And similarly, in the metal form product business also, so although there was marginal growth, but margins there continue to remain weak. So what is plaguing the margins for the metal form product business?
So, Anupam, like we shared in the previous calls, MFPD business is under pressure because of the railway, maybe let's say not kicking off. But I'm happy to share with all investors today. We have signed a 1,000 crore contract for the next 7 years period of time, which is expected to start in Q4 of this year. So railway business, we expect to revive it back starting next year, and rather Q4 of this financial year, which will help us to improve the margins in the MFPD business, which were stagnant or little lower from the last 2 or 3 quarters.
Okay, so will this contract also boost your growth? Because I think for the last 6-7 quarters, railway has not contributed much in terms of revenues, right? The growth also should be stronger compared to what it has been in the past.
Yes, Anupam, starting Q4 of this financial year, railway will be on the growth trajectory back to the original positions.
Okay, fine. And just one last question on the EV business, sir. So EV, we had a target of reaching close to about 120 or so dealerships for the three-wheeler business. But I don't think so. We have reached there, at least what is visible from the website in terms of dealerships. So where are we at this point of time, and what is the target? If you can break it up between three-wheelers, small commercial vehicles, and tractors for this year.
Okay, so Anupam, I'll go one by one. Three-wheeler business at this point of time, we are 85 dealers who are fully operational as of today. For small commercial, and when I say 85, I'm just talking of as on 31st of March. For the quarter ended last year. For the quarter, and the plan is to go upwards of 120 dealership for the year. That is for the three-wheeler business. For the small commercial vehicle, 2 dealers were fully operational as on March 25, and the plan is to be having 25 dealers across the country. As far as e-tractor is concerned, 4 dealerships were fully operational. When I say fully operational, likewise in small commercial vehicle, there were many LOIs which were issued, which I'm not talking about. I'm talking about the number of dealerships which were fully operational. And as far as the tractor business is concerned, so there again, 4 dealerships were fully operational. And the plan is to have about 25 numbers there also operational before the end of the current financial year. And as you would know, for the truck business, it's a direct selling model that we are deploying at this point of time. Maybe we may explore some service dealers, but that will be just done on a pilot basis.
Sure, sir. Okay, I'll come back in the queue, sir. Thank you.
Thank you. We take the next question from Prithviraj Irle from Unify Capital. Please go ahead.
So you made a point of this new plant in the engineering segment. What will be the incremental capacity growth because of this new segment?
It is going to add incremental capacity of overall engineering division about 7 to 8%. But in terms of volume, if we say that, it is going to be about 4,000 tons per month.
And then on the EV side, could you quantify what are the losses for this financial year?
Yeah. This is Mayappan here. See, for this quarter, the loss is 107 crore. What we have reported is 244, and this you have to eliminate the CCPS fair value loss, what we have accounted for in the consolidated statement. That is 137 crore is there. If you remove it, this 107 crore is the PBIT loss for this quarter. And for the year, it is 412 crores.
And we expect this to reach break-even by the end of Q4 of this financial year, right? By FY26.
No. I think Mr. Jalaj has already explained you that we are working towards EBITDA positive for break-even for two of the businesses.
Okay.
Yeah.
And the railways order that you mentioned is a 1,000 crore order, right? Over 7 years.
That's right.
Okay. Thanks. That's all from my side.
Thank you.
Thank you. Our next question is from Gyanasundaram Swaminathan from Avendus. Please go ahead.
Hi team, thank you for the opportunity. The first one is on the EV business again. Is that I remember sometime back, Mr. Vellayan used to call that we need to do about 1,000 crores in each individual set of these businesses to break even, and we're calling for operational break even in the next year. So how does the number work? I'm not able to add it up. Sorry.
Sir, the target is that TICM, all the four businesses put together, the first immediate target is how do we reach a $1 billion mark, let's say next 3 to 4 years. That's the first objective. Having said that, the second most immediate objective is, as you know, also said, how do we reach operational break even at least for the two businesses this particular year, right? And the third target that we are working towards is that how do we become among the top three players in each of the four businesses that we are operating in. I think these are the three big milestones that we are working towards.
Perfect, sir. Thank you. Should we have a number in mind to say when you're looking to break even in EHCV and the passenger auto segment? Is there a top line number that we should be aware of to be revised from the 1,000 crore number?
So it'll be difficult and not appropriate for me to comment on that at this particular point of time when we have just started our journey.
Right, sir. Perfect. But we can still expect operational break even in FY26 is your commentary right now.
For the two businesses, not for full TICMPL, but at least two out of the four businesses, that's the plan.
Right, sir. And TICMPL, what would be the cash kitty that we have currently, sir, out of that 3,000 crores?
Almost around 900 crores we are having it in cash.
937.
940.
Right.
940 crore to be precise. Yeah.
Right, sir. Thank you. Sir, another one is that can you just explain between two businesses which were written off this quarter, Moshine and the waste to energy business? What is the rationality behind it?
So Moshine, which we started for a features phone market around 1.5 years back, we find maybe let's say whatever our margin expectations are there, that is not getting fulfilled in that business. That's why, but it was a small business around 15 crore. So we taken a impairment in this current quarter. What you're mentioning about the Astro Villas, that was done in the Q1 of this financial year, which was basically an investment in the startup for the R&D project. And when we see that maybe it was not progressing well, so we have taken a call on that. I think it was around 3.7, 3.5 crores. 3.5 crore was a investment in the startup.
Right, sir. Fair enough, sir. And one more management-related question here with Mr. Vellayan not being on the call today. Should we read like this is move because he moved to a non-executive role, or this time he's not present for a one-off reason?
So Mr. Vellayan is traveling this time, and that's why he could not join for this call.
Thanks for the clarity, sir. Thank you, sir. That's it from my side.
Thank you. We'll take the next question from Salil Desai of Marcellus Investments. Please go ahead. Mr. Salil Desai, may we request you to please unmute your microphone and you may then ask your question.
Thank you. My first question is for Mayappan. If you can explain, this CCPS impairment provisioning that has been done, what is the reason behind this and how should that change, say, in the next couple of years?
Yeah, I can explain you. See, this is regarding the, with respect to CCPS, what we have invested in TI Clean Mobility. TI Clean Mobility has raised 2,070 crore of CCPS, out of which 500 crore has been invested by Tube Investments as a promoter, and remaining 250 crore has been invested by private equity firms.
Right.
Okay, as per this CCPS terms, it's a variable conversion. Okay, it is not a fixed to fixed conversion. That is, it will not straight away fixed number of equity. It will not get into. It depends upon the performance of the company. At that point in time of the conversion, it changes. The number of shares what they get is changes. That means, as per the Ind AS, we have to treat it as a current. That is, we have to treat it as a financial liability. We cannot treat it as equity in the books of TI Clean Mobility. And hence, for last 2 years, we were also showing it in the financial liability only. And our funding also got completed in June 2024. And since 9 months got over from that time, we have to do a fair valuation on that and accordingly account for it. And it should be a regular feature for every quarter, that is every reporting period we have to do. Okay, and based on which we have done the fair valuation. Since the variability is there on this, and we have to do a fair valuation, we have engaged Big Four for doing a fair valuation and done the fair valuation. It has come to something like 706 crore of number that has been accounted as a fair value loss in TI Clean Mobility. And in Tube Investments standalone business, whatever the investments which we are having, out of which 569 crore is the fair value gain for us, that we have accounted in TI Clean Mobility, TI standalone business. In the consolidation, this gets knocked off. This 569 will get knocked off, and only 137, that's the investor portion's fair valuation, that alone will come as a hit to the P&L in the consolidated TI financial statements.
I see. So just to understand this, at the 706 crore, fair value, which is lower than what was anticipated earlier, right? So should this be read as the fact that, as per the shareholders agreement or the CCPS agreement, the actual performance is probably not tracking what was earlier expected, so fair value has reduced? Right? Is that
No. No. I say actually we never said any number earlier on this, because the fair valuation, the first time we have done it only in 31st of March. See, earlier period, we have considered the cost as the fair value. The reason is the funding was not completed. Funding has completed only during this year. In June 2024, the final money has come in and the entire funding got completed. And hence, we have done the fair valuation now and it has been accounted for. And we never mentioned any amount earlier on this.
I see. Okay. Right. So at on first March, what would be TICMPL's stake in the various Tube stake in TICMPL?
See, right now we are having 100% only. Okay, everything will get converted only at later point in time. Okay, it depends upon the market conditions at that point in time.
Understood. Okay, right.
Yeah.
Thanks.
Yeah.
Second is for Jalaj. If you can, the 106 odd crore, negative EBIT that we have in this quarter, what would be the major cost items that are leading to this? Last year, I think 2024, we had R&D expense, some corporate support expenses and all, as some of the major ticket items, and there's some professional fees also. So it would be good to know, what are the big ticket items, and if you have a path to, say, Q4 profitability, then which of these items will either reduce, or is it going to be just revenue growth, thing that is going to drive the EBITDA break-even?
Yeah, this may happen here. See, whatever we have reported here is operational PBIT, which we have given you. That is, I mentioned in the earlier thing also, 244 was the loss which has been shown as in Q4, and out of which, if I remove that 137, 107 is the loss. Right. And in going forward, see, because the EBITDA break-even will come in two of the businesses, that's what Mr. Jalaj has said, that will come in the future quarters. See, that means, we will be able to maintain this because it's only operational loss. There is no specific behind this, because once the revenues start kicking in, then this loss will automatically come down.
Right. So what I was trying to understand is, are there startup costs that will reduce, or is it also going to, I mean, obviously revenues will go up.
Costs will not come down. Revenue will increase, and by which you will be able to get more contribution on the product, whatever you are selling, and that will be able to absorb the fixed costs.
Understood. Okay. So it's not that there are some startup costs that will reduce.
No.
Got it.
No. Yeah.
And lastly, on the railway 1,000 crore orders, if you can just clarify what this order is for, and 7 year kind of seems like a long duration for typical railway orders. So good to understand the nuances behind this.
So like we said earlier, maybe it is a order, maybe let's say like you see railways going through the privatization route, maybe one of the many trains orders got awarded to one private player, and in turn maybe that has been particularly bogie has been given to us. So it is starting Q4 of this financial year. It will continue to another 6 years is a time period given.
Got it. Okay. Thank you.
Thank you. Our next question is a follow-up from Rishabh Shah of RBSA Investments. Please go ahead.
Yeah, thank you. Just want to clarify, like you mentioned the target of $1 billion revenue in EV segment. So does it include exports or it's only for the domestic market?
Total, the entire size of the business, including exports.
And I think we're supposed to review the feasibility of the cycles business. So have you taken any call, or I think we're targeting some export market there? What is the status on this division?
So, Rishabh, like we mentioned in the previous calls, we think cycle business is already into black, and this year particularly, our exports has gone up, and we continue to focus on exports and the other categories of the cycle business, which we feel it is going to grow in coming future.
And just added a clarification on the consolidated P&L. I can see the total profit and loss is around 158.19 crores in Q4. And the breakup between the owners of the company and non-controlling interest, the ratio has come to 30 to 70, from 70 is to 30 last quarter. So is this due to CCPS only, or what is the ratio that can we expect going forward?
Yeah, see, this 46 is predominantly because of the CCPS, 136 crore you have to add and then see. Okay, that will be the impact. If you add that and then see, then it will be 183 will be the number for the total number TA. Okay, as against 46. Okay, that will be actually 183 if you remove the CCPS thing.
Okay, understood. And just last, if you just share something on the CDMO piece, what is the progress and what is the roadmap, 2 to 3 year roadmap on that?
So, like earlier mentioned, our construction for the plant has already started, and we expect that to be over by coming year, let's say Q3 and Q4, maybe in middle of that, the construction will be over, and then we'll be able to go to the mass production level in the CDMO business. And that lab, what we mentioned, the customer acquisition is continuing, and which is encouraging. And then maybe after this commercial production happening for the large scale, we will be able to ramp up even for the CDMO business starting next year.
Thank you, sir. Wish you all the best.
Thank you.
Thank you. Before we take our next question, we'd like to request participants to click raise hand icon to ask a question. The next question is from Vipul Kumar Shah of Samangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity again. So my question is regarding TI Clean Mobility. We have cash of 900 crores. So considering current losses, we'll be forced to raise capital at TI Clean Mobility level in near future.
No, this may happen here. We don't have any plans of raising any further investments. No. Yeah.
Since we are
already fully covered. Yeah.
So then how we are going to fund the losses? No, we have only 900 crores left. You yourself have said. So if losses, when volumes will increase initially, losses will also mount. No.
So Vipul, as of now, we see that maybe we are covered for more than 1.5 to 2 years cash available. Also, maybe like we earlier mentioned in the calls, we are very prudent on the increasing our fixed expenses and all those things. We are very careful being a part of TI Murugappa Group. So we feel as of now we are covered up to 1.5 to 2 years time. Yeah.
And sir, my second question relates to engineering division for your Nasik plant. So when it will become fully operational in 26-27, what type of revenue contribution we can pencil in for the entire year?
So we expect this plant to be fully operational by Q3 of this financial year itself rather than 26-27, because one thing good working when the steel scenario, because of the safeguard duty introduced, we see there will be uptick in demand for the CRSS business. And as earlier mentioned during the call, this plant we have done a capacity of around 4,000 ton, and which we feel should be get fully utilized by Q3 and Q4 of last year. And then
So,
based on the progress, we have a plan to further expand depending on how we are progressing.
so at once it reaches its optimum utilization, what type of annual revenue run rate we can expect from that plant, sir?
So, like we maybe let's say, rather than giving plant-wise revenue targets, we maybe to give a guidance on the engineering division overall, we expect double-digit growth, what we mentioned in the previous call, to continue for the engineering business going forward.
Okay, sir. Thank you.
Thank you. Our next question is a follow-up from Gnanasundaram Swaminathan from Avendus Spark. Please go ahead.
Thank you for the follow-up. So one question is that we've also given a board resolution saying about a 300 crore fundraise. What is the plan for this particular debt raise that we've called out for?
Yeah, Mayapan here. This is a generic resolution, that is enabling resolution which we used to get every year. See, this as per the regulations right now, we have to get this on a year-on-year basis. That's why we are in the first board meeting. We always get it for this year. And only in the need we will take, but we don't have any plan to raise at this point in time.
Right, so perfect. And with regards to incremental cash that is being generated this year, how should we look at capital allocation as a policy?
So, like we mentioned, as of now, maybe 5 verticals are already there, and the TI, CMP, like we discussed, they are fully covered for next 2 years' time.
Right.
And the capital outflow will be happening for particularly TI medical, CDMO business, and for the core business, what we are going to do it. And as we said earlier, maybe we are also exploring newer opportunities. So, depending on the attractiveness of the opportunity, fund will get allocated to that opportunity also.
Right, sir. And one last one is that TI Medical had a loss this time. What is the reasoning and what is the turnaround period here?
So, as let's say I earlier mentioned, we have invested a lot for the exports business, and which is going a bit slow. We agree on that particular piece, and starting maybe next 1 or 2 quarter itself, we are expecting whatever there is a lag was there for 1 or 2 quarter should get carried away, and then we see that it'll be back to profits.
And with the current set of investments that we've already done into TI Medical, what is the kind of potential upside that we're looking, sir? ROC of 20%, 25%? What is the number? I'm just asking us that from the current investment that we've done for about 260 odd crores, and the partner putting about another 67, 68 odd crores, 350 crore investment. Up to what revenue levels can it take this company into, and when will further investments be required on TI Medical?
So we are already exploring, maybe like you say that maybe if we do any acquisition, maybe let's say it is coming at a higher price points, which is not as per our philosophy of TI. But it is going to be a growth vertical for us. And coming to answer your question of, as a overall TI, we expect always ROC more than 25% on whatever we invest after the business gets stabilized.
Right, sir. Fair enough, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may click on raise hand icon. We take the next question from Ms. Anupam Gupta from IIFL Capital. Please go ahead.
Yeah, sir. So a couple of questions. Firstly, in terms of CapEx, can you please detail what are the planned CapEx and investments in FY26 by businesses, if you can give that breakup?
For the core business, we expect as of now, we'll be investing around 300 crore in our core business. And like I mentioned earlier, further investment will be going towards the TI Medical, CDMO, and any other opportunity comes in front of us. That's how the capital will get allocated for the current year.
So, can you detail the quantum which you have planned for medical CDMO, and if there is anything planned for EVs as well in this year?
So, Anupam, that depends on the size of the opportunity. Maybe it will be very difficult to mention what kind of a capex will be putting it. Like we said, we are studying on the field of TI medical, either through organic or inorganic route, whatever it comes that will depend on the size of the opportunity.
Okay, okay, understand. And one question for Mr. Jalaj, in your remarks, you said they are looking at more battery options for three-wheeler. I understand your current pricing is a bit higher than what competition is offering, and also because of the type of battery which you're offering. So, if you can you talk a bit more about what changes we are looking at and what will it do to your pricing versus competition?
So, Anupam, as of today, what we offer in the market is a higher capacity battery. In fact, we and one of the competition are the two ones which offer a higher capacity battery. Our battery capacity is 10.2 kilowatt hour. So, the recent we have seen in the market introduction of products with lower battery capacity as well. So we will be offering them also as one of the variants, which will give us some advantage on the pricing that we can do. Not only that, when we introduced our product, there were certain very unique features and which were the best in the class features in the category, which of course, the competition has caught up upon. So very soon we would be launching a refresh version of our three-wheeler passenger variant, and which we feel that will again give us the competitive edge as far as the product is concerned. One thing which remains unchanged in the market is the premium positioning that we have positioned our product with, which is something customer also acknowledges, and customer is therefore willing to pay a slight price premium also on our product vis-a-vis the competition.
Okay, okay, understand. And one more question on for you, Mr. Jalaj. So, on the trucks, obviously, we were the only offering to a large extent in the last year, and now we have seen that larger incumbent has launched almost a similar product as what we have from IPL Tech. So, have you seen any impact from there, or how are you preparing for that sort of competition and possibly more launches in that segment?
So competition will come. I mean, we are all embracing towards competition. Not only from one, we will see competition from many. There will be many more entrants into this particular field. However, what is important is how many trucks have been put on the road in terms of the actual usage. I gave the figure earlier that out of 206 trucks deployed in the country, 172 were deployed by us. And what is important in case of the big truck business is the successful establishment of the end use cases, which we have been able to do across 6 to 7 segments. So competition will come, but I guess we believe that we have a very good head start vis-a-vis the competition, because anybody, be it competition, be it us, it took us about a year or more than a year, about 2 years, to establish the successful end use case. So there will be a learning curve which the competition will also follow. Yes, the learning curve may be slightly smaller, but everybody will have to go through that learning curve.
Sure. And one last question on Moshine. So you have taken the write-off, um, given the sort of margins which you are seeing. But let's say, um, is Moshine in that business? Are you still open to take that electronics PLI which is there? Can it be housed under Moshine, or is that a very tough place to put incremental investments in, given the sort of experience which you have had over the last year or so?
So, Anupam, like we said earlier, maybe electronics is a field we are not averse to, but as of now, whether we have decided anything to do in the electronics field, the answer is no. But we are open to this field because it is going to be a growing field coming in the time. Like you mentioned, even government is giving a PLI, but as of now, we have not taken any call.
Okay. Fine. That's all from my side. Inba, if you have any more questions from the participants, you can take that. Otherwise, we can, I think, close the call.
I will check again, sir. Ladies and gentlemen, if you wish to ask a question, you may click on the raise hand icon. We have a follow-up question from Jnanasundaram Swaminathan from Avendus Spark. Please go ahead.
Thank you. So one last one. Can you just explain the utilization of the current engineering and metal form division, and what is the upside that we've got left there in terms of capacity?
So in engineering division, our capacity utilization is maybe, let's say, if I exclude the Nasik plant, which is just started, and there is another plant going to come in the Falton for the tube division. If I include this both put together, our capacity utilization will be around 80%. And in the MFPD business, maybe because it is a varying business, but overall number will remain again at around 85% capacity utilization in the MFPD also.
So do we have incremental capacity to take that particular railways order? By the time we'll be adding a new capacity, the assumption through the 300 crores we're investing this year into the base business?
So like I maybe let's say mentioned in the tubes and the cold roll strips, we are covered for even at least next 1 to 2 years, because both the capacity addition, one is just started, another is going to start another down the line 1 quarter or 2 quarters. So we are covered in the tubes. And like we already, let's say it is already in public domain for the MFPD division, we are also investing in the same place, Falton, along with the tube capacity, which will also be good to go for next 2 years time.
Right, sir. Perfect, sir. Thank you. It was a great call, sir. Thanks, Fred.
Thank you. Our next question is from Namit Arora of InGrowth Capital. Please go ahead.
Thank you very much for the opportunity. Sir, my question was on the EV business. Clearly, you are pioneers, and there may have been some learnings since you started compared to the original business plan. So could you walk us through any of the key learnings so far and any revisits to the business plan that you need to make with the 3 to 5 year view? I know it's a new market and you are pioneers, but it'll be good to get some early color of qualitatively how you're feeling about this and any tweaks or changes you need to make to your approach to this EV business. Thank you.
So Nimit, as I just said, I'll just maybe reiterate those 2, 3 points that our big milestone of reaching $1 billion, that doesn't change, right? So that in terms of business plan doesn't change. So the end destination remains the same. That is number one. Number two, that we are the pioneers, so therefore we would want to be among the top 3 players in each of the segments that we play in. So that also doesn't change. Yes, there have been few learnings. So 1 or 2 learnings that I can share with you is that for truck business, for example, we have realized that the time from which we start pursuing a opportunity or start engaging in the in a sales talk to the deployment of the truck, it's a long lead time item, right? We earlier it's not so much about selling a truck. It is about a complete project getting institutionalized. So that's one learning that we have got, because there are multiple stakeholders which are involved, including charging infrastructure, the logistics service provider, the end use case, the financiers, etc. So that's been a learning. The second learning has been that in many of the EV businesses since inception, it is the end user, I think, to whom, or the end use case business viability that needs to be established, be it in case of tractors, be it in case of small commercial vehicle. The only exception is the 3-wheeler business, where the business is primarily a B2C business. And since the business has reached almost 26% of the electrification, so it could be a usual through the channel sale of the 3-wheeler business. But as far as all the 3 other businesses are concerned, it would remain primarily to start with a B2B kind of a end use case establishment before the sale can be executed. These are some of the learnings, and there are some more, but these are, I think, the top 2, 3 learnings that we have picked up as we have moved in this journey.
Thank you very much, sir, for your very detailed and candid thoughts. This is most helpful. All the best to the entire team and many compliments to the entire group for phenomenal value creation across group companies over the past decade and more. Thank you very much, sir.
Thank you.
Thank you.
Thank you. As there are no further questions, I now hand the conference back to Mr. Mukesh Ahuja for closing remarks. Over to you, sir.
So we are thankful to all for a fantastic questions, and this also helped us to have a learning opportunity. Thank you very much for your support.
Thank you. Ladies and gentlemen, on behalf of IIFL Capital Services Limited, that concludes today's conference. Thank you for joining us. You may click on the leave icon to exit the meeting. Thank you for your participation.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.